All right, all you devils, happy Friday. Sam here with you. Well, let's see, it's about 12:30 here on Friday the 12th. Because we'll take a look at Bitcoin here. We'll look at it through two lenses, technical analysis lenses, if you will. Check in on Ethereum, the S&P, and then perhaps, if I've got time here, we'll take a look at another AI traditional asset here that we've looked at in the past. So as we sit here looking at Bitcoin, this is the perpetual mix contract off BitGet, right? You guys know BitGet is our sponsor, so the majority of the time we'll do any analysis off of BitGet. I thought we'd look at the perpetual mix here and kind of make that distinction between spot and what we'd be trading here in the futures. So it was suggested to me, I had a few comments over the last couple of weeks, that mixing market structure where we have order blocks and supply demand zones, etc., with the Elliott can be a little confusing for someone who's learning. They're still trying to figure it out, and certainly you can end up there's a lot on your chart, and it's always easier when it's your own chart, right? You know what you put there, and it's easier to read it. So I thought what we do today is I would look at this just under those two lenses here. So we look at a pure market structure, and of course I think you all know, or members and probably regular subs, we work closely with the guys at Sonar Labs because we like this product so much. It's such a nice tool for market structure. It's just doing some of the work for you. It can't replace. I mean, again, you can do this yourself, right? It's like software. It's like Elliott Wave, anything, right? You can do it yourself, but it can be a little bit. There can be an efficiency enhancement, right? If you're using a piece of software to do it for you. So we think their product is really reasonably priced, and we do have a discount arrangement with them. So if you're interested in market structure and applying it to in the same way that we apply it in the context of an Elliott framework, because they complement one another so well. That's why we started really promoting this and adding it into our analysis. If you look underneath this chart in our little link tree, there's a discount code. So if you wanted to trial it, it'd get you 10% off if you decided to make the investment. I think they have a 7-day or 2-week trial. It's very generous trial, so there's something to consider. Okay, so there's my promo. All right, so here we go with Bitcoin. What are we doing? Well, one of the things that's nice about market structure is that it's very binary, right? If this, then that, right? It's kind of one of the things we like about Elliott Wave. Well, here, so we got a couple of things we can notice here, and some of their color coding here is a little faint. Right? It may be a little bit harder for you to see this, so I'm going to just use. Oh shit! What am I going to use here? So I guess I'll just use this arrow. Or so here, down here, or maybe not here. We'll just use the crosshairs. So here's my weekly low, right? Here's my weekly low. So, pardon me, my 7-day low. Note I'm on a 4-hour. So here's my 7-day low. Here's my daily range here that I'm in. So I've got a weekly range, a daily range, and then I've got the internal swing structure. So if we look up here, you see the strong high, and then this is a temporary low because we can't really call this a low since that, of course, could keep coming down here. Let's get that off. So as you look at where we are, it kind of feels like we're just in an air pocket here. I mean, that's partly looking at the volume profile, which this here, I've just drawn the volume profile, right? I've used the range tool here for volume profile. So from this swing low here, the daily low, to the daily high. I should rephrase here. That's not the daily high and low. That's the swing range from the daily chart. Pardon me, I misspoke here. So this is the 7-day low from the weekly range, and this is not the day's low, but this is the lowest low on a daily chart. So one of the things that they let you do is combine. So you can see here, I've got a 7-day, a 1-day, and a 4-hour. So I can combine time frames. So I can see, which may be a little bit harder for you all to see. Oh shit, come here. Down here, this is a 7-day. That's a 7-day demand zone here because this is the last. Oh, this is the last swing structure here that gave us the launch. That coming back here, potentially there'd be some support. And then you see the same thing here. So I've got a little bit of a mixing and matching here of where I'm going to likely find support, resistance, right? It's always just potential support and resistance. It's not like, well, if there's a box there, it's certainly going to turn there. This is potential support. That's all, right? It's all it ever is. So same thing down here. Now, if we look at this and we think about, okay, per market structure, what would be the next trade we'd be considering? Well, we can see via the breaks of structure here, and here this is a change of character on the daily. Here's a break of structure on the 4-hour. Well, there's not much confusion about where the larger degree trend is, right? Where the trend's been going higher. Now, this is the corrective phase. So even if we, here, let's do it this way. If we use the daily low here to the daily high in terms of trying to put together swing structure here that would make sense. Well, as it sits right now between this strong low and this strong high, well, we're still in the premium zone, right? So we'd want to be looking for something below the 50. Now, of course, at the 50 is we're at least on the edge of discount here. So if we start to think about how that could play into just some things that we know the market responds to, right? So if I just take here, we'll do it. We'll just do just golden zones here. Oh, come here. All right. So we'll take the 38 off and we'll just look here. So, I mean, we've been looking at this for the last couple of weeks from swing low to swing high. Almost doesn't, the Elliott count, we'll get there in a second, but here's the last strong low before we launch and break structure, right? So this is the dominant low here. This is the dominant high. So as we're coming back, well, this is hard to miss, right? Hard not to notice that, right? So if we come into this structure here, well, okay, so it's not just that there's prior pivots there, right? That by itself, is it noteworthy? Yes, noteworthy, right? Well, but it's noteworthy for beyond just the double top that's here. It's that I'm right in line with the 50, and I'm right on the edge of a high volume here. So I'm right into a low volume node where very little transactions, very little business was done. We went up, we went down, right? So we did not stay here. So these two here, and then you can kind of see it here. So as we're coming back to this, potentially there's a reaction there. But I would definitely, did I say definitely? Definitely not be sitting with a limit order here. It's just me personally. I don't like to do that, right, myself. I don't like to just sit here, a limit order, and hope, right? I like to see if we're going to get there. And in this case, because we're kind of in this air pocket, I'd want to see a little something, right? So maybe I get a little change of character here, and then we come back down here. I've got a demand zone here. I could maybe pursue it that way, but I would not just sit here and try and buy the turn, right? It's something I talk about quite often. I mean, ideally, you'd get something like this, right? Where you'd break something more significant here, retrace down to it. Now, kind of put the whole idea. Perhaps there'd be a demand zone here because money would be committed to have created that change of character. If we come back to it, potentially that's your opportunity. Now, it's always just potential, right? Nothing says that couldn't just blow right through that and we head down lower. I mean, nothing, right? I'd feel a little bit better down here because if we think about where we know the algorithm is likely to respond, well, that's right here. Right, so we're just opening up that range. So really, if you look now at the volume profile, I'm just framing the transactions that were done here. So to give me enough business being done here where I've got a potential pivot here. Now, additionally, there's a demand zone here because there's a pivot low that produced the, if I were to draw it in, right? So if we do this, right? So with this little pivot down here creates the change of character, which then ultimately creates the break of structure. I know if this is, if you're not familiar with this, I've got a couple of videos here in some playlists here. If you just go to our playlist and you search for market structure or smart money concepts, right? I think there's 11 or 12 videos in there that go through all the theory, lots of examples, and specifically tied to the Sonar Labs tool suite, although they continue to update them on a pretty regular basis. All right, so back to the chart. Well, okay, we've got an upswing here. We're in the retracing section of it. So what are we looking for? Well, we'd want to see the market come down into the discount range, which we just went through that, right? How we get discount if we get below the 50 in that sweet spot here between the 50 and the golden zone where I've got a demand zone. And I've got a high volume node. So a lot of things teeing up here for the potential. We come down here, we get some structure. Maybe it's the demand zone, maybe it's the golden zone, something down here where we'd be looking for a reaction. Now, as we start to put this in an Elliott context, then we can start to see, okay, how these two work so well together. So if I were to get a push off of this, and if I were to see 5 in that, and then on the retrace, it might be back down here to this demand zone, something like that. Excuse me. So that would be kind of the setup that we're after here. Now we've been talking about this for several weeks. It's not so much I'm hoping it comes down, but in terms of where's the next trade opportunity. So if we're coming down here into this 25 range, I mean, there's two ways to think of it, right? So here, if you're trading in the futures market, which is, if you're in the US, getting harder and harder to do. But if you were doing that, depending on how you're accessing, I mean, certainly you're going to want to put a stop on it. So again, I wouldn't sit down here. I'd want to see a little reaction off of that. And then I can frame my risk reward here much more effectively rather than, well, okay, let's hope it stops there. That's never, hope is no place for hope in the markets. Okay. So as we look at this coming down here, again, let's come back to the swing structure. What we'd want to see is for the market to come down into the discount range, then give us some sort of a change of character. So as it is right now, the trend is down. The long-term trend is up. The short-term swing structure is down, right? Here's the last low. Here's the last strong swing high because that's the last high that led to this change of character. An internal break of structure. So I would want to see something here significant rather than just a little, right? I mean, could easily roll that over. So what I'm ultimately saying is we go down, so this is a 4-hour here. If we get, I want to see a 5 here, right? I don't care what it looks like, right? Well, ideally you'd get a little impulse here, but it could be a diag, right? Show me a little 5, and then I would just sit and wait for that little 3 to follow. Maybe it's down here. Now I've got very controlled risk. I've got substantial upside, right? I mean, target would be that daily high, but we're not likely to get there in a straight line. So you'd be looking for 1, 2, 3, 4. Maybe we do something like this, looking for that, right? That's what you'd be after. Maybe we get a little more in that 3. So there's the roadmap. Well, of course, within all of this, you're going to have little changes of character to come back down here. Then this, let's see if we can put the whole thing together. Now coming back here, now you'd be in sync, right? So here's, again, just in the theory of how to approach market structure, and I'm doing a little bit of a combo here of Elliott, right? Show me a 5, give me a 3, and then on the little break here, that might be something that you'd use. It might be down here. It might be you're going to be a little bit more conservative. You know, there's flexibility here in terms of your entry approach. I mean, ideally, you could do the same thing. If I do the same thing down here and we look at this and say, oh, well, if I can be a buyer down here in the discount of this range here, I can put a stop underneath the pivot. I can give it a little, if I want to be a little more accommodating to the market, I could put it under the golden zone. But note here, I've also got a daily demand zone here. So this becomes a question of how much risk do you want to give it? Do you want to trade it in futures? Do you want to trade it in spot? And just look at this entire area here as accumulation. An area where you might accumulate. It's up to the individual, right? And your risk tolerance. I might spread the two. I might do a little combo of myself, right? Because if we come down here, I'm very interested in participating. I might do a little combo of some futures and some spot. You know, my risk tolerance accordingly to account size and your risk tolerance and your stress levels and all the things that we talk about in terms of, you know, there's no reason to overtrade, right? So, you know, you don't need to go heavy here because of course the thought is, okay, we're going to get into a 3, which would be something like that. Lots of opportunities along the way to participate in all the little retraces. Right, which the market we know will likely offer to us. So we're kind of watching and waiting. This is good news that we're coming down into an area where you'd likely want to be looking for opportunities to participate on the long side. Of course, there's nothing, the market is under no obligation to stop here, right? We could just, you know, let's be mindful of the risk, right? So just this the nature of the beast. And we're, you know, the thing with Bitcoin, it's really showing how brutal it can be for leverage trading. We'll look at it here when we open this up a little bit, although we can probably do it just as well here. The similarity here, let's take this off here. The similarities here are really striking. Come here. So you see it here, where we get this. If I can put that together, we get this pattern here where we get this liquidation wick and come all the way back. We don't get a new high. And we do damn near the identical thing right here. Big liquidation wick. We come all the way back, equal highs. We don't quite get it. And then we just did it on a smaller degree right here. We just did it right here. Same thing. All right, so let me go to a 2 hour here where those really stand out, right? I mean, even this, right? I saw something like $100 million in liquidation off of this, look at these. This is the devil's bargain, if you will. If you're trading with leverage and you're trading in the futures market, you're vulnerable to that, right? That's what's happened. That's liquid. That's just getting bent over there, right? That's sorry, but that's the reality, right? If you want to trade Bitcoin futures, you've got to be prepared for that. And you can't be prepared for that. All you can do is put a stop on your trade and hope you don't get massive slippage, because these kind of events are. What's interesting is we go through the liquidation, we come 90% of it back. Liquidation, 98% of it back. Liquidation, didn't get added. Well, it's not quite that bad. All right, we got a good chunk of it back. What do you get here? 80% of it, swing, right? But now we roll over. So what's interesting additionally is that each one of these was followed. Oh, pardon me. This one didn't go too far. We had this one. Went down here, we got a new low, and then we rallied. Here, we eventually rallied and then got a new low. This one, right, straight into a new low. So this volatility, I mean, you could almost make the same case. You really could make the same case that you did it again here. It just wasn't just a waterfall, right? Little pause along the way, grab for a snack here, and then up we go here, and then you've got it again, right? We're setting these equal highs up here. Down the escalator, up the stairs, down the fire pole, up the stairs, right? These are very, very consistent. So it's just showing you how vulnerable the market is to this kind of price action. So something to be mindful of if you're a futures trader. Okay, so as we sit down here looking at, okay, well, where do we want to get busy down here? Again, this is how you get liquidated. So be mindful of that as you allocate. My suggestion would be in terms of asset allocation. So I absolutely want to participate in adding to my spot holdings down here. I'm interested in participating on the future side, but my size would be less because just for those reasons, right? Just looking at it, right? This just okay, right? So it's a double-edged sword, right? It's beautiful when it's going up, right? And you get this kind of pumping action, right? We all love that, but it's violent, quick, and painful on the way down. So just let's keep that in mind. Okay, so let me keep moving here. I'm getting sidetracked here. I think we all can identify 25K here as an area to, at the very least, maybe put an alert on that. So if we're, I mean, what are we at now? 26.7. So another $1,500 down here. This is going to start to get interesting, and then we're going to be looking for that kind of entry model that would allow us to participate without taking undue risk, right? Without making ourselves vulnerable to this kind of price action. All right, let's go over and look at it from an Elliott perspective. Now here I'm over on BitGet. I'm on the spot count. All right, so we look here. This is the same count we've been looking at. Now this has gotten a little squirrely. Hang on a sec. It's hard not to notice how we are coiling around the set of median lines here. So swing, retrace here. We've got, pick your pivot, right? It becomes just a matter of kind of honing in on where we see the best reaction down here, because there is no right answer here. We could do it this way and say we're not there yet. We could do it this way, and now we're kind of too far outside. This one is a real contender if we're going to come down a little bit lower, and that lines up so nicely with the 50 here, right? And now as we look at it here, so again, there's no right answer here. Excuse me, darn it. Sorry, if you live in Austin, if you suffer from allergies anywhere, this is the worst time of the year for us. So I apologize for those of you getting an earful in the mic. I'm trying to be mindful of it. Okay, so as we sit here, is this the pivot? Well, it's a tough choice, right? So if we look from swing high to swing low, right? We get through here, so it's a little sloppy up here on these pivots. It cleans up a little bit better if I go to log scale. It's no better, right? So these are just sloppy. And so it looked like you were going to get another one here, so that you were just going to be on the other side, but the same thing here, right? A little sloppy. Looks like it's heading down for the median line. So with this, the volatility here around this price action here has not been ultra precise with regards to the algos. So there's a little bit of a, you know, we're going to go here and hold here and wrap with trading principle number 4. If we're not going to pivot right on it, as we see here, we're not going to pivot right on it. Perhaps we'll coil around it. Here, you just put a sliding parallel on it. Something like this. Right, kind of trying to match that. So if we come back up in here, you'd have the 50 and the 618. If you were to retrace back into that, that might be an area to look for further downside. I think the thing that's interesting here, we come right down, we tag it to the tick. Back now we're outside, but we're heading back down. And if this has got more legs to go, boy, that lines up just beautifully. Again, don't feel like, oh shit, if I don't get the turn, I'm going to miss the whole thing, right? We don't, number one, we don't know that there's a pivot here. But if I were to get this, right, then I can, right, same idea. And now you look at that and you say, oh man, what if it does that and just wicks me out? Okay, well, welcome to trading, right? That can't ruin your day. The question is, okay, well, if we come down a little bit lower and then we go, right? Can you do it again? Oh, I got stopped out again. Okay. Put your big boy pants on, get used to it. Okay. Oh, can I do it again? Right? Because I promise you, this is just how the market works. All right, if you're like, fuck, man, I took it twice. I'm not taking this one. That'll be the one that goes. Right, I can almost guarantee it, because the mistake is not taking it. Right? You're like, God darn it, darn it, darn it, darn it. I'll let that one go, and that one will you'll get something like this. Right? It's just how the market is. Right? If you've got a valid, whether it's an Elliott count or you're at a zone here where you can see it makes sense in your mind. Right? Why would the market pivot here? Why? If there's enough reason here beyond just, maybe it's technical, maybe it's a combination of technicals, fundamentals, risk tolerance, Fed policy, could be any reason. The point being, as long as we're still valid here, you've got to be willing to take a few stops along the way. Otherwise, the one that you don't take, it's just, the market has amazing capacity to do this. The one that you say, oh, that's it, I'm not taking it, I'm going to wait. That's what you'll get. So I don't want you to misinterpret that as over trading. It's being deliberate about, okay, well, I've looked here. See, half the point here is that if you're taking that loser there, that should not be a day wrecker or a week wrecker or any kind of a wrecker. That should be, oh, okay, well, because if you go all heavy here and you get stopped out, then now it's a little harder to take the next one. All right, well, I'll try twice. I'm going to go heavy again. All right. All right, I guess I'll wait. Whereas if your risk is appropriately sized, and all of these should be, okay, right, okay, next. Do I still like it? Can I see a count here that makes sense? Am I in a potential demand zone where you would understand why the market respond here? Now, that's not always the case. Sometimes the market just decides, right? It's time to rally. A whale steps in, could be who knows what. But you've got to be, you can't be afraid of it. You've got to be willing to get in there and say, okay, well, think of it this way. If you're going moderate size here and you get stopped out, okay, well, nobody likes getting stopped out. But if it comes down here, okay, well, because I didn't go heavy here, I can go again. And then if I get the turn that I'm looking for here, and I get, maybe it's the change of character or something, well, okay, now I can add up here, right? Because I'm anticipating 5. There's almost always an opportunity to add into a winning trade, but you're adding with house money, right? That's what makes it all that much easier. Now, granted, you don't want to give it all back, right? And you can see, boy, you see plenty of examples here of people giving it all back, right? How about the people that bought right here, right? That's giving it all back, right? Did they get out? Who knows? But just, I guess the broader point is 2 points here. if you're trading the appropriate size for your emotional risk tolerance and your account size, it shouldn't be a motherfuck. It can't be like a day wrecker. It's just another trade, right? So you hear me say that a lot. You've got to put it in context, and you can't go heavy. There's never a time to go heavy, because then well, number one, you're taking all of the intellectual joy of it out, because you're so fucking stressed, because now you're checking it 200 times a day. What's it doing? Because you're overtraded, right? There's too much size. So don't fall victim to that. If I don't get it here, and if it doesn't go here, well, screw Bitcoin. Think it through, right? Have a trading plan. Have account risk tolerance is appropriate for your account size. And then none of this really, again, I caught one. Oh, I caught one. Oh, good. I'm in the 3. Well, do I want to consider adding when I get the 4? God damn it. Right? If I get a little 4, I get this nice little house money here, because I need to do that, right? I got to get as much out of a push that I can to offset all the little losers. All those little losers, right? When I get it, when I'm in sync with the market, when I can see it, when I visualize it, the trade I visualized is what shows up, which will happen. You've got to be a little more aggressive there. And that's the difference here, right? So, and it started with just, here's an average trade. Here's another average trade, but now I'm in twice, right? And I'm adding with house money. It sounds simple. It's, I'm sure you've heard it from 1,000 people before, but it's hard to do. It's very easy to say, right? Because as soon as money's involved, right, nothing more emotional. Well, maybe it's debatable, but certainly one of the top two is your money, right? What's happening, right? What's your emotional threshold for volatility, right? Can you withstand that? Can you withstand that? Can you withstand this? How are you feeling right now? Me? I'm salivating for the opportunity to participate down here, because it's been a long damn wait to get something to set up. And I think back to all the comments I get when these things go, and like, oh, you dumbass, you missed the whole thing. You feel like you're too conservative. You're such a pussy. Blah blah blah. Right? The assumption, right? Did they all get out? Right? Or those kind of things don't really bother me, because I've been doing this for so long that I'm beyond trolls bothering me. But coming down here, this is the whole point. Oh, well, maybe you didn't participate here. It can't be, oh shit, I missed the whole fucking thing. No, probably not. Probably you're going to get at least a 50% retracement right back to where it launched from. So that said, okay, I think we have a decent plan here. We know where we want to start really honing in. Now, what if we don't get here? What if it doesn't get here? I mean, we're all teed up here. Everything's there. The median line's there. The structure's there. The volume profile is there. Everything's there. Well, the market is under absolutely no obligation to go there. None. Do you see something here you like enough? If you don't, and it goes anyway, well, you're going to have to deal with that. Let's get this back over here. Let's assume that we get some sort of a push up here for whatever reason. I mean, who knows, right? Why? We get some sort of a push up here. It would be on a smaller degree the same thing as this. Oh my God, I missed the whole thing. Oh my God, I missed the whole thing. Oh my God, I missed the whole thing. Probably not. Probably a retrace. Oh, shit. Oh, okay. It looks like maybe this is done. I got an ABC here. Maybe I'm going to use this pivot. Maybe it's the fair value. You probably can't see those very well. Fair value gaps here. Imbalance. That's all it's telling you. What is imbalance here? Went too fast. Oh, maybe it's going to pivot here. Oh, we didn't get into that low volume here. Just it held right on the edge. I don't know that it's going to hold there. Of course, I have no idea. But if we start to go here, the point is not to chase it. The point is say, oh, okay, well, that was unexpected. Well, let's do what it's going to do, and let's look for the next retrace where I can get in with appropriate risk controls, money management. But same story, different day. Okay, let's go to ETH. ETH is a little funkier. Oh, pardon me. Well, let's see. Did we get? Yeah. So we've got here as we get the Elliott count on this. Oh, let's finish up here before I move off. I'm trying to get used to my my new format here, some market structure, some Elliott. All right, well, so is there, well, this is actually kind of a tricky count in here. What have you got here? This 1, 2, 1, 2, 3, 4, 5. That looks good. This is, you know, there's that volatility, right? What's interesting here about this is we come up and we come just ticks away from overlapping the 1. So leaning into the idea this is a 4 seems to make sense. You got an 8. Now, what have we got here? Oh, it's probably some sort of a, oh, it's probably some sort of a combo here. You'd have to, you know, gosh, a W, you're probably doing an X here and then trying to come down for a Y. So it almost doesn't matter, right? At this point, what do you have here? You have something very abnormal, right? You just have a liquidation wick and it comes all the way back to where it started, right? Again, there's a same thing on a different degree, right? Just like these, just like these, just like these, right? We go down. Oh, it's on sale, all the way back to where we started, right back to premium. So is there a clean Elliott count here? It doesn't look great, but would that be a buying setup down there? Well, I'm on a 4 hour. Let's go to 1. It doesn't look like it's done, does it? This would have to be some sort of a triangle to get you to this pivot here. So you can't do, you can't really, well, you probably have to do this, something like this. 4, oh shit, how are we going to get this? This is a cluster F. Oh, W, X, Y. Oh, I'm improvising there. Let's get you out of there. What are we doing here? It almost doesn't matter, right? Is it technical, right? So what else can we look at, right? If the Elliott's unclear, you know, you don't have to say, well, shit, I can't trade it until the Elliott clears up. I mean, that's not an unreasonable position to take, right? If you're a hardcore Elliottician, right? But that's why you know, I will often say Elliott's not perfect. You're not going to find perfect wave dynamics at every time frame. In every asset class, there's going to be times where just volatility. Now, once we resolve down here and we get a pivot, and we, you know, assuming we get a pivot down here eventually. Oh God, come here, right? Is that it? Maybe, right? If we go down here, we're looking down here. Oh, we start to get a pivot. Okay, well, we'll work through a count then. When it's this unclear, I just go, well, shit, I don't know what it is. Does it really matter, right? I can see what I've got here, right? I've got a pretty clear channel going down here. The count is elusive. Okay, well, does that mean I can't trade it? Well, I just hit, if I go from secondary, right? Come right into the golden zone. I think we're too far here. It's probably too far, right? So then if it's not going to be primary, I'll go to secondary. Okay, pretty good. You know, is it an algo, right? How do we know the algo, right? If we go from this pivot to this low, we come right up. We're in between the 50 and the golden zone. We come right just shy of that pivot. Here's the reaction at the first target. Boom. Here's the second target. I don't know that we pivot there. Here would be third target. Now we're down, pardon me. Well, that's going to be pretty damn close. That's the 50, so you probably actually would have. Where's third target? Right there. So look at that. That lines up. Right, that would be the 1618. So if this has got another kick on it to get down here, I'd have the 1618 from this algo play. First target, second target. Do I get the reaction down here at the third? I sure would be looking for it if we're coming. God, I could never get that on the first one. Right, all I need is that. Now come back down. Order block. All right, maybe you got something. Here, we can just put this. We'll just do it like that. Maybe you got a little imbalance. We're coming back here. You know, it's the same program, just put together a little bit differently. Give it to me, right? If I get a little 5 here into the 2, off we go. Right. Okay. All right. I think the Elliott, we'll get there once it clarifies. This, and it may be that we end up just. We'll come back to that when we get a better read on it. Okay, let's get over to ETH here. Still working on the assumption that we completed an impulse here. So we've gone 1, 2. This is much like Bitcoin, but same thing. 1, 2, 3. Did we complete a 1 here? And if so, are we working on the 2? Well, that would make sense, right? That would be your first thought, right? Can we simplify 1, 2, 3, 4, 5? you know, 3 down, WXY is a combo. 1, 2, well, pardon me, 1, 2, 3. This looks very 4-like. Push up to the 5. Okay, well, what would your first thought be? Okay, well, something completed. Oh, let's see. I don't even think I have any market structure. Do I have it on? Yeah, I do. Oh, yeah, I do. Okay, so here we're coming right to it. Swing low, swing high. Where are we right now? We're in the demand zone here, and you're seeing that little reaction. Now, we don't know. It doesn't look like it's done, actually. So it looks like that's got another leg on it. Though this looks like you almost can't. This is actually kind of a unusual count. Looks like I can go A, B, C into the B, C. So you'd have to do, I think you'd have to do it this way. This is the cleanest count I could find. A, B, C into the B, C. All right, so you got your A, B, C, gives you a W. A, B, C into an X, and then you cannot get an impulse here. So you're stuck thinking, okay, well, if not, then what? Well, it looks like I've got an impulse here, a 3 here, and then another impulse here. So it looks like you got to go A, B, C here, and then another A, B, C into an X. So W, X, Y, X looks like A, B, C still needs to go here. So if this, right, we shall see, right? Do we get something like that to get us the Z, to get us the 2 at this degree? Don't need that. Get this down here. Give us the 2, which is right where we're looking for it in the first place. So if I go to back to that 4 hour, right, here's where we're looking for it. Right here. We're already coming right to it. Right, here we are, just tapped the structure there, just broke the wick here just slightly. Just now into the discount range here. We're into the discount range of this narrow order block or demand zone if you don't like order block, right? Demand zone. Reaction, does it look like it's done? Doesn't really. It's got that same volatility that Bitcoin had. So it looks like you're in the same, kind of got the same problem. What do you do with that? X, 2. Maybe you're working on a diag A before you get the B, before you get the C, right? So you'd be anticipating, right? It doesn't mean it's, again, no guarantees. You'd be anticipating something in the shape of a 3 to come down here and finish this off. And then, right, same thing as with Bitcoin. Okay, well, now let's see if I can get this before I get into that. Can I get that? All right. I don't think there's much else, so it's going to be very similar. Oh, just a quick look here at the S&P. We haven't really gone too far. Right? It feels like there's been a lot of volatility, but out here on a daily, we're still, that really hasn't changed. We're still in this supply zone up here at the edge of the golden zone, kind of waiting for this to resolve. Still, the candidate here is that we've got an X, and this is some sort of ascending triangle. We shall see. Of course, the implication is we come out of here, and we do something like this. This 3,200. It's kind of been my target down here for a bearish outcome here, assuming we don't, blow up here. Maybe we're reconsidering that, or we probably would be. We shall see. Right? So, but this golden zone here is clearly the pretty solid resistance. It's not just the golden zone. You've also got a big supply zone here, which has been tested 1, 2, 3. There are those that will tell you that we've fourth test and we're going through, but as it sits right now, we're just consolidating. So likely something comes out of here that's aggressive. Okay, so before we do that, we got to do something AI because everybody's all AI all the time. So here's C3ai. Sensei, one of my newest sensei, PKS Avenda, has been watching this. We've taken a couple of looks at this. It looks like you might have a better setup here, just the kind of thing that we look for. Now the count here is a little wackadoodle, right? So we get this big craziness here, but we come down here and we put in all these equal lows down here. So 1, 2, 3, 4 up, and then on the 5th, right? As you think about the S&P, perhaps. A lot of times we hold. Now, what's interesting, right? So probably not surprising. When we come back, where do we run into resistance? So this count here is, the first premise is that you've put in a good low down here. This count is it's so abnormal here that, okay, one, shit. You'd have to do something expanded here to make this make sense. So whatever we've done here, we've come back here right to the demand zone here. I'll pull this out because don't want to confuse you with that. It's not part of the market structure. But note here we get a fair value gap imbalance, right? Which ahead of the demand zone. After all that craziness, we come back to, and what do we pause on? Okay, so let's go to a 60 and see if we like the look of this. This would be, again, just setting up for, it's not the kids' tuition money. This is just another trade, right? I like to put it in that context, so that it's not, oh my God, if this one goes, whoa, ooh, man, I'm gonna be shopping for Lambos. It's not that kind of thing. Okay, I've got a potential pivot here, nothing more. I've got a potential pivot. Okay, I can come out of here, and it looks like, if I label it up here, it looks like I've got a 1, 2. Oh shit, what do we got here? 3, 4, 5. Looks like we got it. 1, 2, 3, 4, little kicker in the fifth. So a nice little impulse where we run into all those equal highs. That's the 200, right? That's the got MA. Average of the EMA and the SMA. Okay, so I've got a little pivot down here. I've got a good candidate here. Look, you can see it looks like they swept those lows. So all of this just kind of part and parcel of decent order entry placement. So it's not quite ripe just yet. So where do we want to go? Where do we want to look for it? All right, so let's zoom in there a little bit further. See how this looks. Well, we come right back down here into this zone here. Let's take this off. See what I've got here. So here's the demand zone here because this is the last pivot that gave me the internal break of structure. So all of this looks intriguing. Though looks like you might be doing a WXY because if this is the top here, A B C W, A B C X, we'll see what we get up there. Let's just, for the time being, let's see if we can get something like that to bring it back down here into this range here where I've got, marking off the 50. Here's the tapped once. Here's a fair value gap. I know it's a little hard to see, but this is some of the benefit of the Sonar Labs products is just drawing these in for you. It's just the difference between the high and the low, right? We see that imbalance. So it's not like it's, like you can't do it yourself. But it's just efficiency. It's just saving you a little time. Okay, right. So I can come through here and say, okay, where are the likely areas of support? Well, much like with Elliott Wave or anything we're doing, where we're looking at fib ranges here. If I use this tool here, we want to buy in the discount. Then let's put it on sale. So if I can get it anywhere down here, and now we look at that in the context of what we just did with, let's get this back in alignment here. Let's go back to just GZ right here. So here, right here, there's a fair value gap just ahead of this where we launched. So if we come back anywhere in this range would be high interest, area of interest, right? We can even use these prior wicks here as resistance. Why? Why? Well, probably technical resistance. Maybe secondary. Hard to say, right? You're just looking for something here. I won't dig for it. It really doesn't matter, right? So we got, what did they do down here? They swept the lows, right? So all the stops that were here get taken, right? And then up. Oh God, I knew that thing was going to go. You got, do we get a new low there? Oh, it doesn't matter, right? It looks like you might have to do 3, 4, 5, and then coming out of this, there's that big 5 down here. Now this one you could do, you just own the underlying. It's not terribly expensive equity. You go to options, but you're going to want to buy time. I'd probably do a little bit of both, right? Depending on your comfort level with options. Okay, you're looking for something to come out here if it's offered down here. You're looking for something more meaningful, but you got to give this some time. Now I'm down on a 1 hour. You got to buy some time. If you were going to go to the options market, you're gonna have to buy a little bit of time if you want to participate. If the premise is that this is the correction, this is the 1, 2, and then we're gonna go for a big 3. Well, that would be your target. Let's go out to a 4 hour here and see if we can put something together here. Well, here would be, at least per the wave structure, or pardon me, the market structure. Well, this is the swing high because this is the high that broke these low. Well, here's the change of character. It's breaking lows all the way down. So you can understand why there's not only, there's a supply zone here, but this massive fair value gap. And then here's 50% of it. So reasonable target here. Let's see if we can put that together. Oh, if we got that. All right, well, here would be just coming right up to the edge of it. May or may not get there, right? Oh, here, let me come back here. Break, maybe a broken order block here becomes a breaker block. We got that potential. Right now, I'm getting way ahead of ourselves, right? We don't know that we're going to break this. For all I know, we come back here and we pivot. But just if this is 1, 2, 3, then what else, right? You start to frame the whole thing just like every other trade, right? It's the same way every time. That's the power of it. 1, 2, 3, 4, 5. Now we're out into, here on a 2 hour here, you're into the middle of the summer. So if you're an option trader, you got to buy time, right? Which means you got to spend more. Another one to look at, right? So trying to give you some more trade ideas rather than just teach the theory of it, and look for applications where you can say, hey, okay, well, I've been investing my time, or perhaps you're a member and you're looking to say, okay, I want trades. I want trades. Well, we do it with a lot. There's a lot of trade ideas are shared throughout the course of any given week. But on these videos here, I'm very picky about it. I think more so on Wednesday, where we get members, or we're doing that live stream, so members give lots of ideas there, and you just get lots of ideas for setups. But until then, we're kind of a little bit hurry up and wait on Bitcoin and Ethereum. Let's see if they can get into that prime zone. ES is, depending on your time frame here, it's kind of stuck in a rut. But here's something that's actionable, right? You would like it. I'm not saying buy it now. I'm saying give it a little time. If we come down a little bit lower here, maybe set an alert, right? Oh shit. Let's set here. Let's see if I can do it. Let's set an alert right here, just above those highs. If we come back down here and take action. Okay, guys, have a good weekend. I'm back on for this group. Back on Wednesday. We'll do another live stream. We'll get members participating and giving us some setups that they're watching, and those are now every Wednesday at 11:30. So hopefully that is something that you can participate in and catch some of that. And with that, I wish you guys a good weekend, and we'll catch you next time.